The Japanese yen has been on a roller coaster ride this week, with traders caught between conflicting signals from global central banks and geopolitical tensions. While the Bank of Japan, BOJ, has signaled a potential rate hike, the Federal Reserve, Fed, remains on track to cut rates, creating a tug-of-war that's keeping the yen in a tight range. But here's where it gets controversial. Optimism about a Russia-Ukraine peace deal might actually be limiting the yen's gains, even though it's a safe haven currency. Let's dive deeper into what's driving this dynamic market situation. The yen has seen some short-term buying pressure on Tuesday, but the momentum hasn't translated into sustained strength. This is partly because investors are still divided between the BOJ's aggressive inflation outlook and the Fed's expected rate cuts. The BOJ recently raised its inflation forecast, hinting at a possible rate increase by year-end, which has boosted demand for the yen. However, the Fed's plans to lower rates in September have kept the US dollar in focus, creating a headwind for the yen. This divergence is a key point of debate. Should we trust the BOJ's hawkish stance or the Fed's dovish path? Meanwhile, the hope for a Russia-Ukraine peace deal is adding another layer of uncertainty. If a deal materializes, it could reduce demand for safe haven assets like the yen, even as the BOJ prepares for a rate hike. This is a tricky balancing act for traders. On one hand, the yen benefits from a cautious market mood and a slight drop in the US dollar. On the other, geopolitical risks are keeping investors on edge, which could push them back to the yen for safety. Looking at the broader picture, the yen's performance is also influenced by economic data. Japan's second quarter growth surprised analysts, showing resilience despite US tariffs. This has kept the door open for a BOJ rate hike, but the ruling Liberal Democratic Party's recent election loss has introduced doubt. If higher tariffs hurt Japan's economy, the BOJ might delay its plans, which could weaken the yen. This is a critical point to consider. How do political and economic factors shape monetary policy decisions? For traders, the USD-JPY pair remains in a tight range, with 148.00 acting as a key psychological level. A breakout above this level could signal a bullish trend toward 149.0, while a drop below might test support near 146.20. But before making bets, it's important to remember that markets are unpredictable. The release of housing data and Fed speeches next week could add more volatility, so patience is key. Now, here's a question to spark discussion. These are the kinds of debates that keep markets alive, and your thoughts could help shape the future of this dynamic landscape.